Gonna start the recording now. Oh, did you start it? Okay, thank you. Awesome. Well, thanks folks for being here. My name's Lily Hecker. I'm the CITCO Program Manager, the Colorado Industrial Tax Credit Offering Program Manager here at the Energy Office. This is our Cycle 5 webinar for the program. This program is offered through the Colorado Energy Office and more specifically the Strategic Initiatives and Finance team. Today is April 9th and this webinar is being hosted at 1 p.m. One moment. Okay. Sorry. Cool. All right. So a little bit of an agenda. We're starting just a little bit late, so I'm just going to go through these first few steps just kind of quickly. So today I will be doing most of the presenting. Again, my name's Lily Hecker. We're going to do a brief decarbonization overview for the industrial sector here in Colorado. I will then get into the meat of the program, what's being offered for Cycle 5. We are also joined today with Anna Moon and Bailey Vigil from two different offices. One is the Colorado Collective Energy Fund, or the Collective Clean Energy Fund, excuse me, in the Office of State Architect to talk about two different programs that could complement this tax credit nicely for your projects. Then we'll get into a Q&A and then have closing remarks and adjournment. So today we just have a few housekeeping things to go over. To ask your questions, please use the Q&A function. I'm going to ask for you to either post your questions while you have them, but we're going to wait until the very end to ask or to answer them. And then you can either do that or you can submit your questions to the CITCO email or our Google form. And we will respond accordingly. Again, this webinar is being recorded. All of the questions and answers will also be recorded and posted live on our website in the Google Drive. I'm joined here with my colleague today. She's going to be managing the chat box. She posted the CITCO website in there and then also the Google Drive folder and a begin here application submission document. You can find links to all of the documents that we will be talking about in this webinar in that document. Some meeting norms that we like to go over at the beginning. Please be respectful of this time and space. We also value diverse perspectives, so please feel free to ask your questions. And then we just ask that you stay on topic. This is for the Cycle 5 Colorado Industrial Tax Credit Offering program. We're going to be talking about the different criteria and application submission guidelines. If you have any clarifying questions, again, please feel free to put them in the Q&A box or send us an email at the email on the screen. All right, so some of our key personnel in the program. Again, I'm Lily Hecker. I'm the CITCO program lead. Usually if you're corresponding about this program, you're talking to me. My manager or our supervisor here is Will Manis. He's our senior program manager. He oversees all of the industrial decarbonization programs at the Energy Office. And then also we have Elizabeth Lee, or Libby Lee. She's also joined here. She's going to be managing the Q&A and chat box. Additionally, we have contracted with Clear Result, our decarbonization subject matter expert. They do most of our reviews for this program. You may see their names pop up here and there. We have Ben, Eliana, Nate, and Jack. We are joined here today with Eliana and Nate. Again, they are here to help answer all of your technical questions, and they also help us out with managing the program. A little bit about the Energy Office itself. We are driven by a mission to reduce greenhouse gas emissions and consumer energy costs by advancing clean energy, energy efficiency, and zero emission vehicles to benefit all Coloradans. Our North Star is our vision to provide a prosperous clean energy future for all Coloradans. Through those missions and visions, we try to realize our impacts in a three-pronged approach. First is economic benefits, the second is environmental benefits, and last is community benefits. You can see a few of the examples on how these are realized, and all of our programs aim to help provide incentives to meet this mission and vision at the Energy Office. Additionally, the industrial decarbonization programs here at the Energy Office. We also have a mission and vision. Our slogan is to invest today to save tomorrow. Our mission is to provide innovative technical and financial incentives and resources and policy solutions to drive Colorado's sustainable net zero transformation within the industrial sector. Our vision is to increase prosperity, resiliency within Colorado's industrial sector. So this program is to help meet this mission and vision that we have for our industrial programs here at the Energy Office. Again, I apologize, I'm going kind of quickly. Once I get to the program itself, I will slow down a little bit. So I'm going to just go through kind of a little bit of an overview of the industrial decarbonization landscape here in the state, and also kind of a broader decarbonization strategy that's been adopted by the sector itself as well. So in Colorado, and this is pulled from the Colorado 2023 greenhouse gas inventory, the industrial sector, so manufacturing, agriculture, mining, and construction, accounts for around 44% of the state's primary energy use, which then in turn accounts for about 47% of the state's carbon dioxide equivalent emissions. The other three sectors that contribute to our emissions can be put into the buckets of residential, commercial, and transportation. But as you can see, industrial takes up a majority of that pie chart. So when we talk about the sources of emissions, one of the key mission of the Energy Office to help reduce those emissions here at the state to provide a prosperous and resilient Colorado for the years to come. And what decarbonization means is reducing or eliminating greenhouse gas emissions, or GHG emissions, as you can see, as it is referred to sometimes as GHG emissions. This comes from industrial activities, and we'll get into kind of the sources of emissions in just one moment. But the industrial sector, specifically in the United States, is considered a difficult to decarbonize sector, just because of the complexity and the variety of energy-intensive operations that happen during the processes of industrial manufacturing. We like to clarify that decarbonization, so reducing emissions, is not equivalent to and does not imply deindustrialization. Reducing emissions does not mean scaling back the processes and activities, but rather it's transitioning to a clean and more efficient energy sources and technologies and practices. So just like to be clear on that as well. So this is also, so this information actually is pulled from the Department of Energy's Industrial Decarbonization Roadmap, but there's 4 buckets of emissions or sources of emissions that industrial emissions come from. The first is fuel-related emissions. So this comes from the combustions or use of fuels in industrial operations. The second is the electricity use to generate or to be used in industrial facilities, and the emissions that come from the generation of that electricity. The third is the industrial processes themselves. Some of the chemical transformations that happen in industrial processes emit carbon or other types of greenhouse gases during the transformation of those chemical activities. And the last is the manufacturer project life cycle emissions. So the cradle to grave, the cradle to gate, the upstream and downstream emissions associated with either sourcing the raw materials for that product, or when it comes to end of life or the user emissions. So that can do with the transportation of the raw materials, the sourcing of the raw materials, or when it comes to the decomposition of the product itself. So these are the 4 buckets of emissions. When it comes to addressing how to decarbonize those different buckets, it's essential to kind of address the incentive or construct the incentives in a way that helps address those four different buckets. So again, all of these are interrelated. They don't stand still or in a silo. So the four decarbonization pillars of industrial activities comes from implementing energy efficiency measures, electrifying industrial operations, using low carbon fuels or feedstocks or energy sources, and then lastly, carbon capture, utilization, and storage. Sometimes industrial processes cannot be decarbonized. So doing CCUS is another resource or another way to help decarbonize parts of the industrial sector. Again, these are all interrelated and cross-cutting. It is important to not think of them in silos. Alrighty, so after realizing that the industrial sector accounts for a lot of the emissions here in Colorado, and that the Colorado Energy Office is an incentive-based program, the Colorado Industrial Tax Credit Offering, or CITCO, was erected back in 2023. Today is going to be talking about cycle 5 of the incentive, in the application round, and what is involved in that. So, like I said, in 2023, House Bill 1272 was passed. It authorized the CITCO program and stated that $168 million worth of tax credit offerings can be allocated for these types of projects. And it also creates a framework for CITCO eligibility in the process of implementing the program. So if you want to dig into kind of the backbone or the roots of the program, feel free to look up that House bill. So a little bit about the program overview, and then we'll get into the more intricacies of the program. So again, there's $168 million available for tax credit reservations. This framework allows the program to be structured kind of two-pronged. The first is to have refundable tax credits available for industrial studies, so energy and emission audits, feasibility studies, things like that. We'll get into that criteria in a moment. And then also greenhouse gas emission reduction projects. So this is the actual build out of these energy efficiency or electrification projects. The program is offered semi-annually or until the end of 2032 or until all funding is allocated. Another House bill that was passed last year, so in House Bill 23-1272, there's 18 different project types that are eligible for this program. In House Bill 25182, we authorized an embodied carbon improvement, so that helps address that upstream or downstream, mainly upstream portion of the supply chain when it comes to sourcing these materials for industrial processes here in the state. Embodied carbon can be a very complex subject. We're not really going to get into the intricacies of that, but if you want to learn more about how the embodied carbon legislation affected this program, feel free to look up that House bill. We also have Bailey on the phone who helped instruct and design that embodied carbon portion of the CITCO program. Awesome. So if this is not your first time learning about the program, this is not going to be very new to you. If this is your first time learning about the program, I highly recommend looking at the CITCO website and kind of following along as I'm presenting here, because it has more descriptions to what these different things that I'm about to talk about. So for eligible applicants, we have 5 different eligible application types. The first being is our definition of what an industrial facility is. So on the website, you can see, and I'm paraphrasing here, but our definition of an industrial facility is if you were physically or chemically transforming something from one type of material to another. Very broad, and it is strategically that way. Originally, we had the program narrowed down to the North American Industrial Classification System codes, or the NAICS codes 31 through 33. As of this round of this program, you do not have to fall into those NAICS codes. We do ask during the application cycle what the NAICS codes of your facility is, but it is not bound to 31 through 33 anymore. We also have the GEM facilities as eligible application types or applicant types for this program. The GEM rulings are the regulations or the stick to this carrot. They are the 22 highest emitting industrial facilities here in the state of Colorado to help them reach that regulation goal. This program is designed to help provide funding for those projects for them to help meet those goals. Again, we also have as a service providers eligible for this program. These are energy as a service providers. These facilities or companies come in and own and operate the systems being implemented at the industrial facilities. They are able to be the applicant type and claim the credit if the industrial facility wants to design their project in that way. Fourth, we have carbon management project developers. These are the CCUS or the carbon capture, utilization, and storage company types. As you can see on the bottom of the slide, carbon management projects or the carbon management developer projects do not need to be sited at an industrial facility. They can be standalone, but they do have to be located here in the state. Lastly, we have special purpose vehicles. These are an example of this is like a joint venture to help provide a different structure on how the project is owned, operated, and financed. Some of the examples that we like to exemplify are listed at the bottom half of this slide. These are some of the examples of the NAICS codes 31 through 33. They include things like food and beverage manufacturing, paper manufacturing, chemical manufacturing, textiles, cement, etc. It is important to note that landfills and tax-exempt entities for this program at this funding cycle are not eligible for the CITCO program. Additionally, midstream oil and gas facilities are also not eligible for this program. And that is unfortunately written in legislation. If you'd like to learn more about that, please read House Bill 1272. Awesome. So what does this program funding round look like? The application period opened on April 1st and is closing on June 30th of 2026. So it's a 3-month application period. Applicants are able to request a tax credit for one of the 2 prongs of this program. So the first being industrial studies and the second being the greenhouse gas emission reduction projects. For industrial studies, it is a 30% tax credit of the approved costs. There is no minimum ask for this 30%, but we do not exceed asks of above $1 million. So when you are filling out, and we'll get into the application attachments here in a moment, but we have a project budget workbook that you'll fill out with all your capital expenditures. The project workbook will then automatically calculate a 30% tax credit for you. For industrial studies, there's no minimum ask, but it will not allow you to request more than $1 million. Same structure for greenhouse gas emission reduction projects, as it is a 30% tax credit of the approved capital costs. But we do have a minimum ask threshold of $75,000, and it cannot exceed the cap of $8 million. So same concept, you'll fill out the project workbook with your approved capital costs. It'll automatically calculate that 30% tax credit for you, and it has to fall between that range. We do like to say that we, on a case-by-case basis, can increase that 30% to 50%. You're not allowed to request the 50% right off the bat. But in the application itself, there is areas in which you can explain your project innovation and demonstrate your need for a potential increase to 50%. Some important things about this application round is if you request a credit reservation and you are awarded a CITCO tax credit, The credit can be reserved for current and future tax years, but it cannot be reserved for studies or projects that are either being completed or have completed before you're awarded the tax credit and gone under contract with the Colorado Energy Office. We get this question a lot. No expenditures that have been incurred or invoiced before the contract is signed can be claimed towards the CITCO tax credit. So our industrial studies, we've outlined them into 4 different categories, but as you can see in the second category, there's an or other option. So if you have something that doesn't necessarily fall into these 4 categories, but you do fit other eligibility aspects of the program, please reach out to us. Because you potentially will be able to fit into that other category. But the 4 main categories are energy and emissions audits, feasibility studies, pre-front-end engineering design studies, and then a full front-end engineering design study. In order to apply for a greenhouse gas emission reduction project, you have to apply with a study or an equivalent technical document, but we prefer studies. If you want to approach the CITCO program to receive cost coverage for a study and then use that study to then apply for a CITCO project or build out project, you're able to do that. They're meant to kind of be staggered and stacked like that. So the greenhouse gas emission reduction projects, we have now 20 different types or 19 different types of eligible projects types, one being a catch-all. This is a comprehensive list of the different project types. These are outlined in legislation, but we do have, as you can see at the very end of this list, this other measures and improvements. Catch-all project type, if your project does not necessarily fit nicely into one of these other 18 project types, you're able to apply for that other measures and improvements one. The only caveat to that is that the difference between your business as usual scenario emissions and your implementation of the project emissions, there has to be at least a 20% reduction between the two. Again, all of the criteria, the definitions, and how you can see if your project fits into these different types of categories are explained in specific standards and guidelines documents. If you go to the link in the chat, you can find those we call them sub-applications, standards and guidelines documents. You'll see a comprehensive list of all of these project types, and you can go into those documents and see if your project fits into those definitions. And then also what is required from each of these different project types. At the bottom of the slide, you can see that these reduction projects are eligible at either retrofit sites, expansion facilities, or new builds. If you fall into an expansion or new build project, so if you're looking to build a new facility here and implement energy efficiency measures, there are a few more criteria that you have to meet in order to be eligible for that. We have a guidelines document for that in the supporting documents folder on the Google Drive. I'll get into our office hours structure here in a moment, but if you are ever in a unique scenario, please join office hours so you can talk to me or another program manager for this program one-on-one, because we can help kind of guide you on what are the different criteria that's necessary for your specific scenario. We've also expanded the program to allow for project bundling. This is definitely a unique scenario. Usually the program is designed to have one type of retrofit project at one specific project location. If you are looking to either bundle project types, so apply for multiple different types of projects at one location, or implement the same project at different locations, but all owned by the same organization, we do allow for this type of application through CITCO. It just kind of gets a little bit difficult when it comes to being able to provide the CEO or the energy office with a clear narrative of these scenarios. So again, please join office hours if you're in a looking to bundle multiple project types at one location scenario, or looking to implement the same project across multiple locations scenario. I'm happy to talk to you about these different criteria and see how we can make the program work best for you. So what are the different project costs associated with the program? It is essentially all capital expenditures, so CapEx costs. This includes all of just the labor associated with those industrial studies and or the capital costs associated with project implementation, so the procurement of the equipment of the project, or the labor to install the project, or if there are any retrofit or other hard costs necessary in order to make sure that the project is up and functioning correctly at your facility. This is a comprehensive list of all of the base capital expenditures, but you can also see other allowable and disallowed costs for each different sub-application. So please look at the general standards and guidelines for this list. And then also the specific sub-application that you are looking to apply for, as that there are also different allowable and disallowed costs associated with each sub-application. And again, the project budget, you'll put all of these expenses into the project budget. It'll calculate that 30% tax credit for you. Right, so I've been kind of mentioning this along the way, and I know we're a little bit behind, so I apologize, Bailey and Anna. Just give me a few more moments. So the standards and guidelines document is our request for application document for the tax credit. Because it is a tax credit and not a grant, we can't call it a RFA document. We call it our standards and guidelines. It is essentially our RFA. So please look at the general standards and guidelines first, and then look at your project specific standards and guidelines to make sure that you're fulfilling all the necessary requirements for the program overarching and also your project specific. The documents kind of get into the nitty-gritty of the eligible costs, like I've been mentioning, the disallowed costs, the reporting requirements associated with the program, as they can vary amongst project types. Again, we've created a begin here application submission document, guidance document. It is found in the standards and guidelines Google Drive folder. Please always refer back to that, as it gives you kind of a step-by-step guide on how to approach the program, and it also has the associated links in that document too. So one of the biggest criteria of this program is that there is a plethora of required attachments associated with each application submission. The general application submission required attachments are a project budget. So we have a budget spreadsheet that you will download and fill out. Your organization or entity's current tax year W-9. The results of the EnviroScreen 2.0 tool in the general standards and guidelines and the supporting application documents folder. You can find instructions on how to fill out this tool and get your results. The fourth being an assigned property owner consent form. There's a link to that also in the supporting application documents folder. And then also assigned attestation. There's also project specific attachments. You can find this checklist in the application supporting documents folder, or link to that begin here document. But some of the specific project attachments include a project schedule, the greenhouse gas emission avoidance estimates calculator, any technical documentation, so energy and emissions audits, feasibility studies, feed studies, technical documents, life cycle assessments, etc. And then any other voluntary supporting documentation that you would like to supply the CEO. Again, this checklist and the project specific checklist can be found in the standards and guidelines documents and in the supporting application documents folder in the Google Drive. Again, just an overview on how to approach this program. We recommend that you download the general standards and guidelines first, identify the project or projects that you would like to apply for, and then go ahead and download those project-specific standards and guidelines. Again, if at any point during this process you have any questions, please join office hours or email us, or if you feel like you're in a unique scenario, please join office hours. I'm happy to discuss with you and instruct you on how to kind of approach the program. But I just ask that you do your homework in advance. And then after you identify your project and that you start accumulating those required attachments, again, they're going to be specific to the project or study type that you apply to. You will then go out and fill the general application and project sub-application out. And there's copies of the applications in the Google Drive folder. Fill those out on paper and then go in and log into the Salesforce portal. And there's a link to the Salesforce portal almost in every single document. And copy and paste your answers into the Salesforce portal. I recommend this process, and it's not required, but it just helps you retain records of your application. And then also, if you're going to be filling it out periodically, it's easier to just do it on paper and then go in and copy and paste everything into the portal. So once you submit an application, or how do you submit an application? You submit it through the application Salesforce portal. A few key criteria is that all bundled projects have to be implemented in the same tax year. So if you're applying for multiple different project types at one location, they all have to come online in the same tax year. And then for applicants during this application cycle, unless you're in a very unique scenario, please only fill out one application, general application, and then as many sub-applications as you'd like. What you'll do is you'll open the portal, fill out that general application, then your project-specific applications, and then you'll press submit. Just more of like a visual representation of this. Like I said before, please just gather all of the information before you log into Salesforce and then go ahead and log in and create a login for the portal. Then you'll fill out your general application and then go ahead and select and fill out. So you'll select your projects, excuse me, you'll select your sub applications during your general application. And then after you submit your general application, then it'll instruct you to go fill out the sub-application documents. Also a reminder to please continuously save your progress. This is why I suggest folks fill out the paper applications first and then go ahead and just copy and paste your answers into the portal. We have a demonstration video for the Salesforce portal created by ClearResult. If you'd like to view it here, you can view it on the website. This link's on the website, or you can scan this QR code now. So once you submit an application, then what happens? Your application goes through 3 stages of review. The first being an eligibility review, the second being a technical review, and the third being scoring by an evaluation committee. During this application review process, the CEO might be in contact with you to ask clarifying questions or request resubmission of documents. If you do not fill out your application to the fullest extent, the CEO may not grant you the ability to go in and resubmit answers to questions. We do recommend that you submit early because this will allow for more time for back and forth between the CEO and the applicant, but it does not guarantee that you will be awarded earlier than anticipation. Application determinations on awards will come no later than September 30th, 2026. For industrial studies, you have during the evaluation committee review, you're scored on 5 different criteria with a total of 55 points. You have to score a minimum of 30 to be eligible for consideration of funding. For greenhouse gas emission reduction projects, it's a total of 115 points, and you have to score a minimum of 66 to be eligible for program funding. So once you're awarded a tax credit, the CEO sends you your letter of intent to award. Congratulations. Then what happens? What we'll do is then we'll initiate the development of a statement of work. Once that is complete, then we'll go under contract under what's called a tax credit agreement. Again, once the tax credit agreement and associated statement of work are fully signed by all parties, that will be your effective date of the program. That is when you can start accumulating those expenditures that will then be, the tax credit will then be applied to. There's going to be semi-annual reporting for all project types throughout your credit period. Excuse me. And then all of these things happen, and then the year in which that your study or project completes will be your the income tax year that your credit is applied to. So that's why all projects have to come online in the same year. When the project completes, you will then submit a notification of project completion to the CEO and submit your package of information, which includes an audited cost certificate request to the CEO. Again, if you're interested on more of the reporting requirements, you're more than welcome to read that explanation in the standards and guidelines. We'll then issue the tax credit to you all and notify the Department of Revenue. You will then submit your taxes for that year, claim the credit, and the Department of Revenue will apply the credit to your taxes. Again, this is a refundable tax credit, so if the tax credit nulls out your tax liability, you'll be refunded the remaining amount of the tax credit. Afterwards, each greenhouse gas emission avoidance project is required to submit annual performance reporting 4 years after the credit. Again, reservation amounts cannot exceed the amount that you were awarded from the CEO initially, and you are only allowed to claim the credit once. Again, the tax credit must be claimed in the year in which that the reservation is approved and all the projects or project completes. And then again, notification that the notification of project completion report and the other specific annual performance reports are project specific. So please refer to your general standards or the sub-application general standards and guidelines for more information on that. Oops, that's backwards. Awesome. So a little bit of the timeline, the application round opened on April 1st. Today is April 9th. This is our webinar. We're hosting 6 office hours, right? 1, 2, 3, 4, 5, 6, 6 office hours bi-weekly until the end of June. Application period closes at 5 p.m. on June 30th, and you will be notified from the CEO no later than September 30th. There's a typo in there, 2026 for the determination on your award. Again, we recommend that you submit early, but again, an early submission does not guarantee an early notification of determination on award. Another important notice is if the awarded project again, no tax credit related work or expenses can be carried out or incurred or invoiced before the tax credit agreement is signed and the associated statement of work has been completed. This is crucial when you're laying out your project schedule. If you have specific questions on kind of a timeline and when a tax credit agreement would be signed, please just join office hours and I'm happy to discuss that with you. All right. Thank you, Anna and Bailey, for being so patient with me. We are joined here by Bailey and Anna Moon. Bailey's going to start by presenting about her program that helps complement the embodied carbon aspect of CITCO. Thanks, Bailey.
Goodness. Thank you for bearing with me and thanks for having me, Lily. Hello all, my name is Bailey V. Hill and I work in the Office of the State Architect, or OSA, managing the Buy Clean Colorado Act for state public projects. If you are unfamiliar with Buy Clean, the program strives to reduce the embodied carbon or cradle to gate impact of construction materials, including asphalt and asphalt mixtures, cement and concrete mixtures, glass, post-tension steel, reinforcing steel, structural steel, and wood structural elements as directed by the statute, which is listed here. OSA set maximum acceptable global warming potential, or GWP, limits on certain eligible material subcategories like ready-mix concrete, flat glass, rebar, cold form steel framing, and more. And along with Buy Clean, I also oversee the eligible decarbonizing building materials sales and use tax exemption. This aligns with the materials identified in the Buy Clean Colorado Act. However, the tax exemption program provides a state sales and use tax exemption equal to 2.9% on purchases of approved eligible decarbonizing building materials at the point of sale. And so this differs from tax credits, as the tax is exempted at that point of sale. So if you are manufacturing materials with GWP impacts below OSA's limits, as demonstrated through environmental product declarations, or EPDs, you have the option to submit those EPDs to OSA for review. And if they do not exceed the GWP limits that we set, they are eligible to make it on the list of tax-exempt products. And so, yeah, not only is this a cool way to demonstrate that you're producing lower embodied carbon building materials, but it also provides an incentive for customers to purchase those products. And then finally, for this slide, the tax exemption applies to any purchase of approved eligible materials where state sales tax is applicable. So this includes personal projects, private corporation projects, and local municipality projects. And I noted a couple of benefits to customers here. These benefits include the 2.9% tax savings applied at purchase, verified embodied carbon reductions, and alignment with state and local initiatives to support green procurement. And a couple of additional notes here. One, to receive the exemption, all materials must be approved through the Office of the State Architect and be available on the Department of Revenue's tax-exempt list. We do have EPD submittal forms available on the OSA website, so you can submit compliant EPDs to us to review at any time. Two, we do review EPDs against our GWP limits and share any new entries with the Department of Revenue on a monthly basis. And you may only submit EPDs to OSA for review if the associated eligible material has an OSA established GWP limit. So it's worth checking out which materials have defined GWP limits before submitting EPDs to us for review. And then finally, the exemption applies at the point of sale. Oops, sorry. So if the exemption is not applied at the point of sale, customers do have the option to file with Department of Revenue for a refund of the tax spent. However, if they must file with DOR, it's worth considering that this process may take a little while to receive the refund. Therefore, if we can ensure that these savings are applied at that purchase point, then we can ensure that this is the best way to get those savings. There we go. Yes, here are some links if you are interested in taking advantage of the exemption or want to submit EPDs over to OSA for review. We have both in single submission form as well as a bulk submission spreadsheet available on the OSA website. And yeah, as a final note on this topic, if you encounter any challenges applying the savings to projects or managing them for accounting, please reach out to us. I am actively seeking feedback regarding this exemption and would love to hear any insights that you might be willing to share with us. And then here is my contact information if you want to reach out to me directly to discuss any further. And yeah, thank you all for your time today. I'll pass it on to Anna now.
Thanks, Bailey. All right, and then Anna, you're more than welcome to introduce yourself.
All right. Thank you. Thank you, Lily, for having me here. Can you guys hear me okay?
Yes.
Okay, perfect. So yeah, I'm Anna, and I head up business development for the Collective Clean Energy Fund. And in my role, I work with project donors to inform them about the financing solutions we offer, and I also engage with potential partners on collaborative efforts. And I want to make sure we have enough time for questions, so I promise to keep this short and just provide a brief overview of what we do and what we offer, and I'll have my contact info at the end. So if folks want to email me after this session, you're welcome to do so. All right, so who and what do we do? So we are Colorado's Green Bank, and our goal is to increase access to financing for clean energy projects. And we do this in a couple of ways. First is by providing concessionary capital at below market interest rates so that more projects can move forward. In addition, we've made a concerted effort to reach project owners who otherwise might not have access to capital. So it could be because of project type, borrower type, or just maybe in that particular geography or the need of the capital type isn't available. So we try to be pretty flexible and also provide that low interest rate. We got our start back in 2021 with initial funding from the state of Colorado, and we've been expanding ever since. We've supported projects throughout the state, both along the Front Range and also throughout the western slopes. We'll be introducing a couple new programs later this year, one specifically for rural communities. So if you have a project that's based in a town with less than 50K in population, we do have a special program for that. So that could be a good fit potentially. But we do serve communities throughout the state. So even if your project is in an urban area, we do have programs that provide funding for those. So in terms of the markets that we serve, we make loans both to commercial and industrial entities and also have programs for individual homeowners. On the CNI side of our organization, we give loans to businesses, nonprofits, and a variety of other entity types. And so if you're attending this webinar, you probably are an entity type that would qualify for our financing. And then in terms of eligible measures, we have a really wide range. This is just a small subset of measures. And so if you have a project that is related to reducing greenhouse gas emissions, then there's a very good chance that it is a covered measure. And so feel free to reach out to me if you guys are looking for capital. In terms of our loan structures, we have two different loan products. First is pretty much your standard term loan. It's got fixed interest rates. To qualify, we will look at your financials and see what collateral would be available. We have a more detailed list of the requirements and the loan application checklist on our website, so I would recommend checking that out. The second loan type that we have is this incentive to bridge loan, and this is specifically for incentives that can be reassigned directly to CSEV. So if there is a rebate or some other incentive, what we can do is have that incentive reassigned to us, and then we provide a loan for the exact amount of that incentive. That way, the project owner has access to funds at the beginning of a project and doesn't have to wait till that reimbursable incentive is paid out at the end. Instead, what we do is we provide that capital up front, and then once the project is completed, the incentive provider sends us the incentive, and that pays off the loan. In terms of our process, it's pretty straightforward and pretty short from the point when we get all of your documents to when we notify you is 30 days or less. That being said, we do tend to have a lot of requests come through. So if you have a project that you're thinking maybe might need financing, it's better to contact us sooner rather than later. And the best way to do that is either to email me or go to our website. There is a project intake form, and this is not a loan application. It's just a way for you to kind of get in the queue, send us some basic information so that we can start a conversation about what financing product might make the most sense for you and what interest rate you might need in order to make sure that the project pencils out financially. And so once you fill out that form, we'll get in touch with you to set up that initial conversation. If you have any questions, here's my email. Feel free to reach out. I'm happy to set up a time to chat, to go over your project or answer any questions. All right, that's it. Thank you.
Thanks, Anna. Really appreciate it. Again, both of these programs can be nicely complemented with the CITCO program. If you have any further questions, I'll be adding Anna. Well, Anna's information is actually already on the CITCO website, but I'll be adding Bailey's as well. And if it's not already on there. Again, if you're a technology type that potentially has an EPD to be implemented at industrial facilities here in the state of Colorado, Bailey's program is definitely something that you can put in your toolbox to help sell your product or, create partnerships with here in the state of Colorado. Awesome. So with that, I'm just gonna share my screen again. We are going to begin the Q&A. If you have any questions, either feel free to raise your hand and I can unmute you, or you can type your question in the Q&A box. I'll answer it live, and or you can put it in the chat. If you don't have any questions, thank you all for coming. We really appreciate you attending this webinar. Again, this is the 5th round of the industrial tax credit, and we look forward to seeing your projects come in. All right. So for accessibility reasons, I also will be stating the questions out loud. Buford Barr asked, do airports qualify as an eligible project location under CITCO? This is a unique scenario. Airports are technically not physically or chemically transforming something from one type of thing to another type of thing. That's our industrial project or industrial applicant definition. That being said, if your airport is producing sustainable aviation fuel, that is an eligible project type under CITCO, under the other measures and improvements application. That would be a chemical transformation. If you're able to prove emission reductions with that, you can apply for that type of project. But when it comes to either implementing renewable energy or energy efficiency measures at an airport itself, the airport would have to be the applying entity or organization. And unfortunately, it doesn't fit into our eligible application type definitions. Do you have any follow-up questions about that, Buford? I'm happy to kind of discuss that more in depth. But I hope that explanation makes sense. Mark Brown asks, where do data centers fit in? If it's the same type of question that Buford asked of, do data centers qualify for this? It's the same answer. Data centers aren't technically, chemically, or physically transforming one product into another. Yeah, that's unfortunately they don't. If it's the data center trying to claim a tax credit for introducing energy efficiency measures, it doesn't fit into our eligible application type definitions. Yeah, unless you can, skew the way that the data center is working to physically or chemically transform something on site and then tied emission reductions to that. It doesn't, it's kind of gray and it doesn't really fit in very well. Again, if you have further questions about that, Mark, feel free to raise your hand and I can take you off mute and we can discuss. All right, we are at the 1 minute mark before we have to adjourn. If there are no other questions, again, thank you all for coming. We really appreciate your time. Again, this webinar will be recorded and posted on the CEO website. If you have any questions, feel free to sign up for office hours or submit your questions to CEO_CITCO@state.co.us. Thanks everyone for coming.